Though I am going to discuss about adjusting ledger and adjusted trial balance. Before discussing about this, we need to know about some term. First, we all know that every accounting period has a particular time. This time is divided into two parts. One is interim period and another is fiscal year. Interim period is time period less than 1 year, like quarter, 1 month, etc. And fiscal year is 1 year. It can be it must be 12 months. It can be December 31, January 1 to December 31, or June 1 to May 31. Next topic is accrual versus cash basis accounting. Accrual basis accounting means um, um, we will record the transaction when it happens. That means it doesn't depend on the payment. Like we have bought a biscuit from a shop, but didn't paid the money, but it will be recorded on our transaction. And on the other hand, cash basis accounting is depend on the payment. It will be only recorded when the payment occurred. Next is revenue recognition principle. Revenue recognition principle means we have to um, record about the revenue when it occurred. It doesn't depend on the payment. And for example, like you have worked for your client, but he didn't paid you. Next topic is revenue recognition principle. This principle says about we have to record the revenue when a company agrees to perform the revenue. We want to wait when the payment will be occurred. Next topic is expense recognition principle. It is just like the revenue recognition principle. The expense will be recorded in the income statement when it occurred. We won't see if the payment is paid or not. Now we will tell about some adjusting entries. From the name we can understand what is adjusting entries. It is about adjusting the journal. So for knowing this, we need to learn about some term like accrued income or accrued revenue, accrued expense. Next is deferred income or unearned revenue. Next is prepaid expense and depreciation and doubtful account or bad debt. Prepaid expense means we already have paid for some expense, but we didn't get the benefit. We will get the benefit through 1 year. So we will treat this prepaid expense as an asset. For example, we can say prepaid payment for insurance, for an insurance, for supplies, for advertising and rent. Here is some example of prepaid expense. Next is unearned revenue. Unearned revenue means we for example, I am a worker. I have been paid for doing some work, but I didn't finish the work yet. I already have been paid. Then it is an unearned revenue. I had though as I have already been paid, so it is a liability to me that I have to work for my client. Next topic is accrued revenue. Accrued revenue means revenue is already occurred, but cash is not received yet. I have already worked for my client, but I didn't being paid yet. Next one is accrued expense. Accrued expense is just like accrued revenue. Um, that means expense has already occurred, but we didn't give the money to um, we didn't pay the money yet. For example, we can say the example of that biscuit. Next is depreciation. We know that all the thing in the world has a life, particular life. For example, a chair. Suppose a chair has 5 years life. So within 1 month or 1 year, it is being um, it is losing its uh, useful life. So this is called depreciation. The opposite account of depreciation is accumulated depreciation. Again is bad debts. Bad debt is about doubtful transaction which is not clear to us yet. For better understanding about adjusting laser and adjusting trial balance, we are going to do a math now. Here, a math is given about Masashi company. Uh, the unadjusted trial balance is given, and some transaction is also given that we have to adjust first. So to adjust this trial balance, we have to do the adjusted entries or adjusted journal first. Then we have to do the adjusted ledger and adjusted trial balance. So to do the adjusted ledger, we have to first see. Here is the adjusted entries or adjusted journal. Here we can understand that supplies on hand at June 30, 600. So first supplies was 2000. Now we have supplies only 600. So how much we have uh, already used? 2000 minus 600, so 1400 we have already used. So supplies expense have been occurred 1400, and supplies become credit. Supplies is a debit balance, but the supplies which we have already expensed, it has become credit 1400. Then next one is a utility bill of 150 has not been recorded. It will not be paid until next month. So a utility bill, a utility expense has been occurred, but it is not been recorded. So here we can write utility expense and utility payable 150. Utility expense debit and utility payable credit. Next one is the insurance policy for a year. So we see the unadjusted part. Here is a prepaid insurance. Insurance policy for a year. So we are doing the math for 1 month. Here 3000 uh, 3000 insurance is for a year. So for 1 month it will be 3000 divided by 12. So we will get 250. So insurance expense become debit 250, and insurance prepaid insurance become credit 250. Next one is 2500 of unearned service revenue have been earned. So we learned about unearned service revenue. It is the kind of revenue which for which we have been received payment, but we didn't give the service yet. So mm, we have been paid for unearned service revenue. How much we have to check? It is 4000. Here it is 4000, but among the 4000 we have provided service of 2500. So we can write this. So unearned service revenue become less, and service revenue become more. So for this unearned service revenue, as is it is a liability, it should be credited, but it has been less, that's why it has become debit and service revenue become credit 2050, sorry 500. Next one is salaries of 2000 are accrued at June 30. So salaries has been occurred, salaries expense and salaries payable. Next one is the office equipment has been a 5-year life with no salvage value. Here we previously we learned about depreciation, useful life of a thing, of equipment, of anything, of furniture, of building. So here we have to do a transaction about this depreciation. So depreciation has been occurred $250 for per month. So per month 250. For this we have to entry uh, depreciation expense debit, and another one will be accumulated depreciation credit. Next one is invoices representing 1000 of service performed during the month but have not been recorded previously in the unadjusted part. So in the adjusted part we are going to record this. Account receivable, as we didn't receive it yet, so account receivable 1000 and service revenue 1000. So now we are going to do the adjusting ledger. So to do the ledger, first we have to start from the unadjusted part. First account is cash, so we will do ledger for the cash first. So let's go for cash. We see in the unadjusted part there is cash of 7,150, but in the adjusted part there is no account named cash. We found no account named cash. So the mm, the balance we um, get from the unadjusted part, we will give the account title as balance BD, that means balance brought down, and directly we will write the balance in the balance part, no need to write in debit or credit. So for cash it is complete. uh, we can see next one was account receivable. Account receivable was 6000 taka, but is there any account receivable in the adjusted part? Let's see. Yes, there is a account receivable in the adjusted part also, which is 1000 in the debit part. So we will write balance BD, which is which we get from the unadjusted trial balance. It is 6000, and in the debit 1000 we will write adjusting here as account title. The account which we will get from the adjusting uh, mm, journal, we will write this adjusting as the account title. So total, as account receivable is a debit balance and adjusting balance is also debit, it should be added. Here it is 7000. So next one is supplies. For supplies, here is 2000. We will find, is there any supplies in the adjusted entries? Yes, there is a supplies here. Here the supplies is credit 1400, and in the unadjusted it was 2000. So 2000 we will write balance BD 2000, and for adjusting it is 14 sorry 1400 credit. So as supplies is a debit balance, so this balance is in the credit, so we will subtract it. Next one is prepaid insurance. So prepaid insurance here is 3000, and in the adjusted part it is prepaid insurance 250, which is a debit balance. So in the same process we will do the prepaid insurance, it become 2050. In the same process we will continue office equipment and all the other accounts from the unadjusted part and the adjusted part also. All accounts, we have to cover all accounts for the ledger. So let's see here. Okay, so after doing all the ledger we will do the trial balance, adjusted trial balance. So we will write all the account name. We have to first need a table like this, a particular section, a debit and a credit column. Then we have to write in the particular section all the account name we got in the ledger. So we in the ledger we got 18 accounts, so we will write that account names here, and we will write their balance in the normal balance part. Cash, the normal balance of cash is debit, so from cash we got 750, 7,150. So as cash normal balance is debit, so we will write the 7,150 in the debit section. Account receivable we got 7,000. As account receivables normal balance is debit, so we will write it in the debit section. For unearned service revenue we got, let's see what we got. Unearned service revenue we got 1,500. But unearned service revenue is just like a liability, so it is a credit balance. So we will write the unearned service revenue 1,500 here. At the end we will get all the balances and we will add this. We will add all the debit here and all the credit here. So we will get a equal balance in debit and credit. So the trial balance is finished.
Now I will discuss about the rest of the ledgers. First one is I will gonna discuss about office equipment. Okay, let's see. In the question we have of office equipment of 15,000, which is a debit balance, and in the adjusting journal, we search for uh, office equipment. So let's see. So is there any office equipment? Office equipment? No, there is no office equipment entries. So here we can write that balance BD is 15,000 taka. Okay. Now next one is account payable. Okay, let's see. Account payable. Here account payable is given 4,500 taka, which is a credit balance. And in the adjusting entries, let's see. Account payable, is there any entries like account payable? Account payable, no, there is no entries like account payable. So we can write as balance BD is 4,500 taka. Okay, and the next one is unearned service revenue. Okay, let's see. Unearned service revenue, here given unearned service revenue is a credit balance which is 4,000. Now let's see in the adjusting journal, is there any entries like unearned service revenue? Yes, here it is. Unearned service revenue, it's a debit balance. So we can write unearned service revenue as 4,000 as balance and adjusting 2,500 as adjusting. Okay, so here it is, the balance is 4,000, which is an credit balance, and adjusting is 2,500 taka, 2,500, which is a credit. So we can subtract it from 4000. Okay, and the next one is capital. Let's see the capital. Yes, here's the capital is in the question. Capital is given 21,750 taka 50, which is a credit balance. Let's see in the existing journal, is there any entries like capital? Okay, no, there is no entries like capital, so we can write capital as a balance BD as 21,750 taka. Okay, and the next one is service revenue. So revenue here, given service revenue is 7,900 taka, which is a credit balance. And in the existing journal, is there any entries service revenue like service revenue? Yes, here it is. Service revenue is 2,500 taka, which is an no wait. Where yes, service revenue is 2,500 taka, and one and another entry is service revenue is 1,000, which one is credit. The both of service revenue in the adjusting journal is credit, so we can write the balance from the question is 7,900 taka, 7,900 taka, and from the adjusting journal, we found that service revenue we found two service revenue entries, which both of them is a credit, so we write them here, and then we since both are in credit, so we add them, and that was the addition of them. Okay, and the next one is salaries expense. Okay, let's see the questions. Salaries expense here, given salaries expense is debit balance, which one is 4,000. And in the journal, adjusting journal, the salaries expense, is there any entries like salaries expense? No, actually there is no entries, so we can put okay, wait, yes, maybe I have salaries expense. Okay, here it is, salary expense. So sorry, actually it missed from my eyes. Okay, salary expense is 2,000, which one is which one is debit. In the questions we found that salary expense is 4,000, which is also debit balance, so we can write them here as balance is 4,000 and adjusting is 2,000. Since both balance is debit, so we can add them, and the balance totally become 6,000. Okay, next one is rent expense. Okay, let's see the questions. Rent expense in the question, rent expense is given is as debit balance 1,000. Let's see, is there any entries? Rent expense, no, actually there is no entries in the adjusting journal as rent expense, so we can write it here as a balance 1,000. Okay, so we have completed the questions entries ledgers, but we have some but in the adjusting journal we can see there are some more account title we need to add it to create the adjusting journal, so we will also create ledger for them. Okay, so then rent is supplies expense. You can see in the questions we don't have any account title like supplies expense, so but you may think that where did it come from? So here's the answer. The in the adjusting journal we can see that here is a supply expense title, so we should make a ledger for it. Okay, supply expense is a debit balance, and it is 100 and 1400. So we can write it as adjusting because we find it from adjusting journal, and which is a debit balance, and also we write it in the balance. Okay, and the next one is utility expense. Okay, let's see utility expense. Here it is. So utility expense is debit balance, which is given 150. So we write it here as adjusting on 150. So like this we need to put the ledgers from the adjusting journals as insurance expense, and depreciation expense, salaries expense, account receivable. So you may understand what I try to make you understand, and that's it. So if you like, comment below. That is accumulated depreciation, and the trial balance is given at the end of the slide. So that was from me. Thank you, sir, for become with us through the last semester. We'll miss you, and sir, keep me in your prayer. Thank you, sir.